I'd love to start off by understanding is, what does OC&C Strategy do?
Focus pretty tightly around 3 or 4 sectors, one of which is media and consumer internet. And within that, that's where I work, and my colleague Mostyn, who I think is joining your panel. And within that space, we really kind of do a lot of work in digital marketplaces in general, and also specifically classifieds. And the type of work we do for those kind of businesses is really about half of it is strategy. So helping those companies make big decisions around, should I launch a new product? Should I expand into a new market? Should I try and consolidate, acquire other companies? Should I form some partnerships? What should I do with my pricing model? What should I do with my sales approach? So either top line strategy aimed at sort of revenue growth and, what am I going to do over the next sort of 3, 4, 5 year time horizon? Or I guess slightly more kind of detailed operational pieces of thinking around my sales approach, my pricing approach, my product approach. So those are the sort of types of work we do in sort of online marketplaces and online classifieds. And then half of it is basically strategy, and then the other half is probably M&A. So we're very, very involved in a lot of transaction related work in the space. Obviously, it's a space which has had loads and loads of interest from private equity, lots and lots of corporate M&A, joint ventures as well. We do all types of work, from due diligence type work, merger assessments, sort of clean team assessment type work, and also post-transaction work and IPO support as well. So that's sort of in a nutshell the types of things that we focus on within that space. And I guess in terms of the online classified players, we work with all shapes and sizes. So we work with some of the kind of smaller players in much smaller kind of markets across Europe, some of the sort of national champions. We also work with national champions in much bigger markets like the US and the UK and Germany. And also we work with the kind of major classified groups operating lots of different businesses and brands across countries as well. Yeah.
From your perspective, what are the 2 or 3 big trends that you've seen come out of the last 3 or 4 months?
Well, I think the first thing to say is that a lot of the transaction type work that we've been doing has continued. So actually there's been no real let up in the interest in the sector from both external investors and also companies within the sector looking at opportunities to buy, to construct joint ventures, etc. So that type of work has really sustained amazingly throughout this crisis, and we continue to be busy helping companies think about that and helping investors think about opportunities. I think in terms of the sort of, I guess, the more strategic type of work we do, again, I think a lot of businesses, clearly there's a lot of very detailed operational stuff that we don't tend to get as involved in. But there's a huge amount of thinking going on in terms of, okay, we're obviously going to have to give discounts to lots of our customers and try and give them a break, given some of their underlying industries have just been completely shut down in lots of different countries, in terms of car dealerships being closed, real estate agents being closed, etc. And also the job market for job classified players obviously has been extremely tough as well. So I guess most obviously there's been a lot of work going out to customers and thinking about what is the right balance of discounts to offer. And then people have quickly turned attention to, okay, and how do we make sure that we get out of that situation over the next few months, and we make sure across Europe, it's partly just depending on obviously the status of the lockdown in different countries and how severe an impact that's had. But I think also the other difference has probably been the actions of the competitors in markets. I think you have some markets where the sort of, I guess, the challenger brands, which for so long have been number 2 or number 3 in a market, and actually some of the competitive dynamics have been quite locked in some kind of established markets for a number of years because of all the dynamics we know about in classifieds. It's very hard to leapfrog a number 1 player who's got a real kind of scale advantage. Actually, so we've seen some of the kind of challenger brands, I suppose, take advantage of the situation and really discount aggressively and put forward some very sort of flexible terms and really try to shake up the competitive situation in some countries in developed markets.
And do you think that over the next 3 to 5 years we'll see a change in structure in these markets, or do you think the right moves will continue to lead the world? The Zillows or the REAs of the world will continue to be market leaders, or do you think there is some form of disruption that can occur?
Well, I suppose the types of disruptive trends that we've all been talking about at your conferences over the last few years, there are some of those trends which some people think will be accelerated by this crisis. So if you think about, some of the mega trends around car ownership, or trends around, do I need an estate agent to buy a house, or do I go direct and try and sell my own house with C2C portals? I think some people's view is that those trends will accelerate. I think we are probably a little bit more skeptical of those types of trends really shaking up the fundamentals, at least over a kind of 3 to 5 year time horizon, which is the time horizon we usually sort of look at. I think there are, the buying and selling a house is just such a massive decision that we still see the role of agents being important. Whenever we've looked at long run statistics of, for example, usage of agents versus going C2C, usage of car dealers versus going C2C, there are changes, there are rises in C2C purchasing across lots of markets, but it tends to be very, very slow. So I think for the most part, a lot of those disruptive trends we don't see as having a really profound impact on the market over the next kind of year or two. But certainly, I mean, the most obvious one is just the economics of car dealers, real estate agents, which are providing the majority of the income for established classified players, are in serious jeopardy over the next year or so at least. And so the implications on growth, I'd say, on the ability to push through price rises, and also the temptation for some customers to trade down to potentially cheaper sources of marketing, including some of the generalist classified players, and potentially alternatives like Facebook Marketplace, I think are quite real considerations for the established players to think hard about.
Okay, and the last question, a bit of a curveball. If you look at the share prices of a number of these listed companies, they were quite high. The crisis or lockdown, meant that they all plummeted, lost half their value in theory. A lot of them have bounced back quite nicely. Do you think that is a reflection of the true underlying value in the businesses, or do you think that's just the market being enthusiastic for the short period of time?
I'm certainly not an expert on valuations in the public markets, but I suppose my instinct would be there was a bit of a shock factor, I think, a few months ago for all of us, because we've all been talking about the people who work in classifieds, and particularly the sort of M&A side of classifieds, have always talked about it being a part of the media landscape, I guess, that is unusually resilient to downturns and economic cycles. And that's partly why it's been so attractive for investors, right? And that's because of the nice insulating factors of there's lots of customers on year-long subscriptions. Actually, what happens to the underlying property market, job market, or car market, to a large extent, car dealers and these real estate agents might be affected. Some of them might leave the industry, but usually they bounce back pretty quickly. And actually, the classified players, again, they're often on contracts. They often effectively go without a year of pricing growth, but they're still just absolutely essential marketing channels. So they tend to sort of hold on to a lot of their revenues. I think this time round, there's a feeling that could be different, but that's just because we're going through a black swan event, right? And it was World War II levels of lockdown on the underlying industries that we're sort of talking about. In addition to that, I think there are probably some high profile issues with specific players in specific markets where there was some sort of negative PR, there was some bad blood from the industry, which potentially exacerbated things. So I think it was a bit of a shock factor at the beginning. I think probably since then, two things have happened. One, I think people probably in a lot of markets, the bounce back of the underlying real estate agents or car dealers has been probably a bit quicker than had been expected. And a lot of those customers are finding themselves busy, at least across European markets. And two, people, I think the models have proved themselves reasonably resilient. So the sort of targets that we've been looking at, the companies that we've been working for, are seeing their, the sort of leading indicators in terms of their renewals, or their sort of month by month pricing, the volumes of listings on their site. Perhaps they had a horrendous March, April, but actually already things seem to be bouncing back, and there's plenty of activity both in terms of listings and also the traffic.
Toby, thank you very much. Fascinating.